Last night, Twitter priced its initial public offering at $26 a share. It opened this morning at $45.10, marking a huge jump. Rob Armstrong from the Lex column is here with me. Rob, is $45 an insane price for these shares?
Absolutely. But it is not stark raving insane. And I'll tell you why. If you imagine that Twitter can grow in the same way that Facebook has since it was Twitter's size in terms of users and revenue for, say, 5 years, you can make sense of paying $45 for this today. But the question is, what probability are you willing to place on that happening? If you think that's definitely going to happen, $45 makes sense. The problem is, $45 doesn't leave you much room for error. If the ad sales on this product don't flower the way Facebook's did, it's just not worth $45.
There's quite a distance between where Goldman Sachs priced this deal with Twitter at $26 and where it is trading at now. Was money left on the table?
So the difference between the pricing level, 26, and the close today of 45 for the number of shares offered comes to about $1.5 billion. So that's a lot of money that the initial subscribers to the offering got and the company did not get. But you have to remember, this offering happened in the shadow of a botched Facebook offering. And Goldman Sachs wanted to be absolutely sure that initial investors were happy, so that if the company has to go back to them for more money, they'll be lining up to do so. And they had to make sure there was not an embarrassing price drop, which could damage the price action in the stock for months afterwards, like happened with Facebook. So this is $1.5 billion fee to make sure the stock goes up on its first day and everyone's happy.
So it's a remarkable first day and coming to market for a company that's still unprofitable and only 7 years old. But where do we go from here?
Where we go from here is we watch the advertisers. So Facebook has put together a couple of brilliant quarters of advertising revenue, especially on mobile. But really scaled up, successful mobile advertising on a social network is a year old, is 2 years old. It's going brilliantly now. But down the road, those advertisers are going to have to reassess. Hopefully they reassess positively. If they start to take a step back or wonder if these advertising campaigns are effective, $45 is going to look a lot worse than it does right now.
Regardless of how this plays out, this obviously bodes well for some of the biggest internet companies looking to come to market, like Alibaba and Square.
Absolutely.